Hi everyone, good evening. This is 26th of October 2024 and today we'll be discussing AGI Greenpac Limited. We'll be doing a deep dive into the business, what it is, what it does and how it's planning to grow. We'll also try and do a quick financial analysis of the company and we will end with my opinion on how the company is valued today, whether it is investable today or not. Again, a disclaimer, this is my opinion on the stock and you, the viewer, are requested to do your own research before investing. This is not a recommendation. This is not trying to influence you to buy the stock. Please do your own research before you invest in this stock or you take any action as such. So let's quickly get into AGI Greenpac. It is originally incorporated in 1960. So today it is about 64 years old business. It is primarily into making container glass bottles, with bulk of its business coming from the liquor industry, where it is making the beer bottles and the liquor bottles. It also serves the pharmaceutical industry as well as the perfume industry. The F&B industry is also a small client. About 90% of the business is still glass production. As a part of diversification, over the years, it is diversified into plastic PET bottle production, but that is a very small part of the revenue in single digits. It also has a few real estate assets which it leases out and earns some rental income, which again is 1% of its revenue. So it's really a very small part of the business. It is today the second largest producer of glass bottles in the country, with about a 17 to 20% market share. It also has a very small wind generation part to the business, wherein it owns a few windmills. If we talk about capacities, the present capacity is 1750 tons of glass production per day, glass bottle production per day. Plastic is roughly 27 to 30 tons per day, and security caps overall annual production capacity is 78 crore small caps and 13 to 13.5 crore of large caps, which it can produce in a year. Utilization in glass production capacities is close to 95%. As discussed, the revenue mix is roughly 90% is glass production and 10-11% is rest of it. In terms of end industries, alcoholic beverages is 77% of the revenues, F&B is 17%, and pharmaceutical and cosmetics is close to 6%. This is as far as the present capacities go. A 60-year-old business, a very stable business. What has improved over the last 60 years is the production technologies, wherein the efficiencies have gotten better and better and better in terms of heating, heat retention, furnaces, and the melting process as such. But otherwise, the business as such has not changed. It will grow in line with the economy's growth or the consumption growth, because alcoholic beverages is a straightforward indicator of the economic growth of the country. So stable business, it will grow at roughly 6-7% a year in terms of the industry size, and AGI Greenpac already is the second largest player, so it will also grow at a similar pace. It remains a very fragmented industry as such, with a lot of smaller players who recycle bottles and produce smaller quantities at lower costs. But overall, I don't see the largest of the players cornering more than 30, 35, 40% of the industry as such. So growth avenues as such are limited. If we talk about industry growth as such, the only growth avenue is through acquisitions, and inorganic growth route is what I see. The credit rating of the company is A plus from CARE in April 24, which is a good credit rating. If you look at the financials, trailing 12-month revenue of the company is 2,400 crores, which has grown at a CAGR of 24% over the last 3 years. However, the 5-year CAGR was only 9% and the 10-year CAGR is a very low 4%. So looks like in the last 3 to 4 years, the management has really geared up and focused on increasing sales, and hence the growth in the last 3 years. If you look at the rest of the numbers, the market cap is about a 5,500 crore today. The stock PE is 21 times when the packaging industry as such is commanding a PE of close to 30. ROC is decent, I would say decent 17.5%. The operating profit margins are a good 23%. That means, yes, it has a profitable business model in place. The ROE is a little low at 14.5%. Normally, ROCE is lower than ROE, but in this case, it's the inverted matrix, which means it is not using its leverage judiciously. Return on assets is a small 7.5%, which obviously means that it has to do a lot of capex to achieve this kind of number. And why return of assets is so slow is the fact that the working capital cycle is a long cycle. It normally keeps a 6-month inventory with it. If I look at the inventory days, it is close to 196 days in March 2024. And the debtor days are close to 1.5 months, about 50 days. So that is the reason why the utilization of funds, if it is keeping a 6-month inventory, then it can only churn the funds twice in a year. So that is where the ROE, return on equity, or ROC are lower than expected. So this is what it is in terms of financials. Is there anything which stands out in the financials? No, not really. It's a profitable company. There is very limited debt of 600 crores on books as of today. Credit rating is A. Revenue is fantastic, good at 2,400 crore with a profit after tax of 251 crore. So the numbers all in all are fair. And so what do I think? What according to me does the company need to do to actually grow? As since it is already 17 to 20% of the market size, it has to grow by quick organic acquisitions. Since it's a fragmented industry, I'm sure there are a lot of investment opportunities available. And the management apparently also agrees with me. About 18 months back, it bought over from NCLT HNG Glass, which used to be the fourth largest company in the country. HNG incidentally is also a listed company, and it has a revenue of similar 2,400 crore today. It has a capacity of 4,300 tons per day of glass production, which when compared to AGI Greenpac's capacity of 1,700 tons is double the capacity. So essentially AGI Greenpac, if the acquisition goes through, will increase its capacity by a factor of 3 compared to the current capacities. From a 1750 crore, it will go up to close to 6,000 crore capacity. Of course, once I read through the details, it will have to divest a few plants like Rishikesh and all because of competition concerns. It should not become a monopoly in the country. So once it's divested, I believe it will be left with a capacity of close to 5,000 tons per day, which in itself means कि if it can double its turnover from the present number in a matter of 18 to 24 months once the acquisition is complete. But what exactly is the status of the acquisition? When will it be complete? The acquisition was approved by NCLT, and of course, it was challenged by a few other players. Uh, then it was also the decision was upheld by NCLAT, which is the appellate tribunal. It passed an order in favor of the acquisition by AGI Greenpac. Then the parties affected went to Supreme Court, and the matter is currently there for the past 6 to 8 months. From whatever I can see and read through, I found an interesting report on this, a detailed analysis of this. Arihant Capital Markets is a merchant banker who has done a detailed report on this. I will put a link in the description below. Arihant Capital Markets is of the opinion that the acquisition will have more chances of going through than it being reversed. When I went through the details and when I saw that the deal was approved by NCLT, then NCLAT, then my opinion is also more or less on the same lines that acquisition, yes, it will go through. So what does Arihant Capital Market report does? It's a research report dated 1st July 2024. It has a buy rating. Arihant recommends that one buys it with a price target of 1742 rupees on the stock as compared to the price of 847 today. It's almost 100% upside which Arihant is projecting. Now, what is my opinion? If I look at AGI Greenpac as a standalone entity, I believe it is a fairly valued stock and it will keep giving you annualized 10 to 15% returns going forward, simply because it will keep growing at that rate going forward. But as and when the HNG Glass acquisition fructifies, the whole scenario changes. Now, for the HNG Glass acquisition, it is a leveraged acquisition. AGI Greenpac is spending close to 2,200 crores, part of it through own contribution, part of it through borrowing. Now, by spending 2,200 crore over a period of time, it will double its turnover. It will grow from 2,500 crore turnover today to 5,000 crore turnover tomorrow. Its PAT margins today are close to 10%. Assuming that the same will continue and it will be able to, get the same efficiencies in the new plant also, the PAT margin on the additional 2,500 crore investment will be close to 250 crores. Now you have to, of course, ensure interest and all is taken care of. So for at least next 3 to 4 years, the incremental PAT will not be that much. Maybe another 100 crore incremental PAT from the additional revenue will come. But in bargain, it is also getting assets worth 2,500 crore from this acquisition. So the way I see this is the PAT, which is 250 crore today, will grow to maybe 350, 400 crore in about 18 to 24 months if this acquisition goes through. So a 400 crore PAT or a 400 crore PAT with a multiple of 20 gives me a 8,000 crore market cap today. So that is the base case scenario which I have. So I personally believe, yes, it's a good play on the acquisition story. As and when Supreme Court rules in favor of it, it will come through. Do I expect any further extreme growth out of the company? No, not really. But this cycle of growth, this visibility of growth, this particular phase of you as an investor and I as an investor can ride together. I personally believe that it's an interesting stock to consider today, considering the fact that the company is wanting to rapidly expand its capacities and it's not afraid to go the inorganic route. It is not afraid to go down to NCLT and buy up stressed assets at a discount to fulfill that growth targets. So with that, we will end this video. Until next time, happy investing.